Good day, everyone. Thank you for joining us once again here at See Freedom Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to review over the employment report that came out last week. Overall, fairly positive in the fact that we generated 313,000 jobs, well above the consensus of 205,000 jobs. In fact, when we look back into history, we'd have to go all the way back until July of 2016 to see any period that exceeded this 313,000 job creations. That's very positive when we look at moving forward over the next course of the couple of months and the quarters in GDP and the potential impact to the ability of consumers to spend their money. Now, when we take a look not only at the overall number, but also at the distribution of those jobs, the positive thing is that it wasn't centered in any one or two areas. It was very broad. So we had a good distribution of these jobs. We did have three areas that stood out. Construction, up to 61,000 jobs. You can see January, it was 40. December, it was 42,000. So we had this continual pickup in those construction jobs. That is a positive. We hope and anticipate that to continue with the housing market. We also look at the overall retail trade, up 50.3 thousand jobs, and then we look at professional services, up 50,000 jobs. So those are the three largest categories that grew, but overall, most of the categories had an increase from where they were in January. In fact, when we look down, we can only see this one negative with the non-durable goods. We had a negative 12 with the information, and that, as you can see, December, January, and February all showed collective negatives or declines in there. But everything else was positive, and that's good moving forward. That's what we want to see. We hope we continue to see these numbers progress in this manner. When we look at the overall wages, though, we can see that the average hourly earnings now at $26.75, up 2.6%. The consensus was at 2.9, so we came in a little lower. With that January wage inflation, we anticipated that to be picking up, but that pulled off a little bit, back down to that 2.6 range. So moving forward, we can anticipate maybe not that high of wage inflation. Remember, when we're looking at some of these statistics, the market sometimes tends to react on these initial numbers, not taking into consideration trending. So we need to, in my mind, if we're going to see this wage inflation, I want to see that 2 or 3 or 4 months in a row in order to really solidify and state that that is definitely here to stay. So right now, hourly earnings up just 2.6% year over year. We did have a slight increase in the average hourly or average weekly hours, up to 34.5 from 34.4. So we pulled off a little bit in January. Now we picked back up in February. Looking at the unemployment rate, it remained at 4.1%. It was anticipated, though, the consensus was to come down to 4%. That did not happen. When we look at the U6, it stayed the same at 8.2. So this is the 5th month in a row we're at that 4.1, and now we're here with the U6 at 8.2. So our spread between the U6 and the U3, the official unemployment rate, has stabilized, but we're still above historical mean. So we hope to see those numbers converge in here. We should look for this U6 based off of history to come down to about 7.6%. That's what we're aiming for. But that's what we have for you today. We look forward to meeting you back here next week as we review some of the economic numbers that's coming out over the next week. Have a great day.